In this video, I'm going to show you the day trading review for crude oil on November the 1st. The setup is the wedge breakout and leading to the second leg. And in the end, there's a head and shoulders reversal and the trend ends. The strategy is to trade at the pullback for the second leg. Another thing for this chart is that we can easily confirm the trend with the upper time frame. Basically, we are trading on 5-minute chart, but we can use 15-minute chart for confirmation. After the London Open, we can draw some trend lines at the top here and at the bottom here. At this moment, we can see it is a wedge shape. And then we are waiting for the trend line break either to the top or to the bottom. Around 420, the market goes up to the top trend line and the reverse. It goes up by 4 consecutive bull bars, which means the strength of the trend, and then followed by 2 bear bars. However, these 2 bear bars are very small, and then it even didn't break this bull bar. And then the next bar at 430, it breaks the top trend line, goes up. So at this moment, we know that it is trend line break leading to uptrend, and then we are waiting for a pullback to trade at the pullback. Then it follows with the this doji bar, this doji bear bar, and then this is kind of the pullback, given the trend is very strong here with 4 consecutive bull bars, with 2 small bear bars, and then another 2 bull bars, so the pullback won't be big. So this is the pullback should be similar to the pullback here. And then we know that we need to prepare for a long position when we see the signal bar. This bull bar can serve a signal bar because the body is leaning towards the top of the bar, so we can trade on top of this bar. Immediately after we put the buy order at top of this signal bar, the next bar triggers the buy order. We're in a trade now. And then we can do a measured move on how far this trend can go. So we assume this is the first leg because the pullback happened here. And then we do a measured move this at the top of the pullback and measure here. So you can see the market goes exactly at the top of this measured move. This is where we want to take the profit. You can also see that the market is bouncing back here by 2 consecutive bear bars and another big bear bar. That's because other traders are taking profit at the measured move as well. And then at this moment, you can see that this is a tight channel. And then the pattern of the tight channel doesn't hold anymore after these few bars. Tight channel is usually followed by a range, and tight channel is very strong trend. So after a few bars, you want to wait for another signal bar to enter the market again. So you can see there is a very good bull bar which can serve as the signal bar. However, if you enter the next bar for long and then for a few next bars here, this bear bar is going to stop you out if you put your stop at the bottom of this bull bar. This is normal because for the range followed by the channel, it really depends on how far it can go down to test the previous level. And the stop out here is also normal because stop is the name of the game. At this moment, because the bars are very small and there are a lot of overlaps, another way to see this trading chart is to use an upper time frame. Let's take a look at the 15-minute chart. On the 15-minute chart, we can see we have consecutive bull bars leading to the uptrend, and then there's a 3 pushback, 1, 2, and 3. So 3 pushes normally will be followed by either the resumption of the trend or maybe the reversal of the trend. So in this case, because here the trend breakup is very strong, so higher probability the trend will continue after this 3rd pushback. Back to the 5-minute chart. After we see these 3 pushes back, and then we can draw a trend line immediately between this and this low. And then we can wait for the trend to resume. And around 8 o'clock, you can see that it's making another higher high here. This higher high confirms the continuation of the uptrend. So when the market goes back to hit this trend line again, so we need to put another buy position. So you can see this bull bar serves as the signal bar. It's a very good signal bar. The profit target should be this higher high. And it's the same thing for the other traders. You can see after this bull bar makes a high, higher than this higher high, and then immediately there's some pullback here, which means other traders are taking profit at the same higher high level here. In the very beginning, we have a very tight channel. So the tight channel is a very strong trend. However, the follow-up, this range, the 3 pushes, means the trend is getting weak. And then at this moment, even though there are consecutive 3 bull bars here, but followed by 1, 2, 3, 4, 5 bear bars, that means the trend loses its steam. So probably after you take this trade and take the profit at higher high, you want to stop trading because it's really uncertain at this moment whether the trend is gonna still continuing up or maybe it's gonna range, get down to the bottom line here. So probably after you take this trade, you wanna sit and watch the market. After that, you can see the market forms a head and shoulders. So head and shoulders is a very typical reversal pattern. And also here, the trend line break, that means the trend is end. Hope you enjoy my video. Thank you.